Welcome to the market recap presented by Tackle Trading. Get in the game.
Good afternoon, Tackle Traders, and hello, YouTube. This is Frank coming your way with the market recap. This time we are hanging out on a Wednesday afternoon. Another slow day in the market from a broad perspective, as still kind of trying to figure out what we want to do with resistance. So hope everybody had a great day both in and out of the market. Let's see here. I'm going to do a quick test here on the chat. If you don't mind saying hello, I usually, as you guys know, I have two different screens, one for the chat, one to stream on. And for some reason, I'm getting yesterday's picture on the rewatching one. So I might need a testing, 1, 2, 3 to make sure. Always easy to tell because I'm not wearing that hat and that sweatshirt today. So, but I hope everybody had a great day in and out of the market as another. And good afternoon, Majid. Great to see you. I hope you're doing well. And great to see that it's done this to me once before, Majid, where I can see, I always have the second screen so I can see the chat and talk with you guys. Most of the time it works fine. This time it is showing me yesterday's, and it's really weird to see yourself talking yesterday when you're talking today, or at least it's weird to me. So good afternoon, Patricia. Great to see you. I hope you're doing well. Interesting day in the market. Another flat day for the most part, but definitely interesting, and we'll talk about it as we get into our healthcare ETF, but really a lot of selling for those healthcare plans today as the Dems kind of introduced kind of a Medicare for all type of a bill. It looks like we'll see where that one goes, but at least today, I mean, you saw Mylan that came down on earnings, but you saw a big down day in United Health, Humana, Cigna, WellCare Health Plan, CVS, Anthem. Some of our biggest losers on the day were in that industry. It'll be interesting to see. That might have an impact on the way our ETF looks going forward. Other healthcare stocks really didn't fare really much different than the rest of the market, but a lot of selling over there in the healthcare plans here today. Fairly uneventful, maybe earnings coming up here going into tomorrow's open. We do have a handful of S&P 500 companies coming out here tonight. Booking Holdings, Monster, Apache coming out tonight. You also have Square coming out here tonight. It looks like they beat earnings and were a little light on guidance, just to kind of catch the headline before I jumped in to the market recap. So Square will be an interesting one to see how they react here tomorrow morning. And then tomorrow before the open, a handful of companies, including Nelson Holdings, CenterPoint Energy. So, I mean, there are some companies coming out with earnings, but none of the huge names, as most of those guys are kind of behind us right now. So awesome to hear that, Fortino. I'm glad it's helpful for you. It's always been helpful for me too. And I've really enjoyed kind of the transition of doing this kind of in my head to talk. I'm glad that it's helpful for you as well. I'm glad to hear that the replays are working for you. I know this is a weird time to do it. It's nobody's lunch, nobody's home from work. So it's a weird time to do it. As we get ready for a fight at least, and at least right now, that's what we are getting here today. It was interesting to note that all of our indexes were able to catch their 9 exponential moving averages and close above that here today after some of them kind of stuck their nose a little bit below it. But here over on the S&P, and hey there, Tanner, good to see you, my friend. Over on the S&P, I mean, really, until, like we said yesterday, until we have a reason, it's pretty much the same as yesterday, right? Another day where nobody's really quite sure what this thing wants to do. Maybe GDP data can push us through one way or the other. We will have to wait and see. Really, I mean, this is not shocking news for us, right? We were kind of expecting this. We had a nice run, and we're fighting, and I'm definitely very open to a break of that resistance. Just have to let it develop. Maybe we get a little more of a pullback. We did see a little more downward movement, even though we were able to bounce nicely off of those lows on the intraday. Of course, that resistance level up here just north of 28 is going to continue for me to be the big one, the big line in the sand. Same deal over in the NASDAQ, right? I mean, really, these indexes are all looking very, very similar and have some pretty, significant resistance, 7,200 in the case of the NASDAQ here, holding the 200, holding the 9. So once again, much like the S&P, the buyers are still there. You know, it's one of those things that no one's really quite ready to go bearish. We're just all a little afraid to go bullish right at resistance. And I think that's a good, healthy mindset to take. A nice little doji here on the Dow Jones, of course, UNH being one of the worst performing stocks out there today, component of the the Dow Jones, call it the S&P as well. Maybe pulling it down a little bit more than the other indexes, but holding off of that 9 EMA as we continue to work into that 26.3 level of resistance. So again, I was hoping to have conclusion, but I didn't expect to have conclusion, and we definitely didn't get it. A little bit of buying on the Russell off of that 9 EMA here as well after struggling at that 1600 marker at resistance. So again, really, as much as I'd like to have a lot of interesting things to say from a broad market perspective today, really it's the same thing we've been talking about all week. And that fight's just going to have to continue to develop. If we see a little more selling, maybe we do get some interesting pullback opportunities, and I am rooting for that personally. We will see if that's what we're going to get or not. We continue to show some pretty good resiliency. There's reasons to sell, right? There's, technically speaking, resistance is a great place to sell. And while we are seeing that, we are also seeing buyers being willing to come in, at least as of right now. Still, all of the indexes closing above the rising 9 EMA. So for my money, no real reason to think anything has changed here today from a broad perspective. Of course, this is going to work its way into our sectors as well, right? Not a lot probably is going to have substantially changed here on our sectors. Over in the materials sector, did push down, you know, working towards that 9, rallying up just like the rest of the market pretty nicely off of those intraday lows, closing clearly, though, once again below that resistance. Exactly. It's not showing a lot of weakness, Tanner. And yeah, Fortino, never fun to get out, the old fake out, stop out. We all have a story or two about that. We always remember those ones too. We don't remember the ones where we stop out and then it was the right play. You know, it's always but then that next day, we all have a story like that. If it makes you feel any better, I don't know if it does, but I hope it does. Over in the materials, I mean, I think at this point in time, again, we're either looking for a little bit more of a pullback opportunity from a bullish perspective or a breakout opportunity if that's the way it wants to play. Still think we need to respect this 56 area. We know that was an old support zone. Probably more importantly, we know that was major resistance, and that's lining up with our 200-period moving average right now. I still really like a breakout in the material sector, just waiting to see if we get there. A little bit of a deeper pullback wouldn't break my heart either, but and this has been a pretty strong area as we know. So we'll have to see where this one goes, but keep an eye on 56. Again, the numbers pretty much aren't changing. Over in energy, we did see a little bit of upward movement earlier in the trading day, kind of unlike the rest of the market that kind of fought back off of the intraday lows. We kind of sold off of the intraday highs in the energy sector. I don't really think that means a whole heck of a lot for me. Just like yesterday, and until it's not here, I'll probably sound like a broken record. As long as we're holding this old 65, I will definitely be looking at this through a bullish lens. I don't necessarily think I would go bearish if we were to break that, but again, probably depend on how that develops if that's the way it wants to go. I still see some room within the energy sector to the upside. You know, we do know that we have some seasonality on our side here from a bullish perspective. Doesn't mean it's going to go up in March, but it does have a history of performing in March. And as long as we're holding, at the very least, this breakout point and above these moving averages, I'm going to have a hard time not continuing to watch for that personally. Our swing support level still down here at 62. So even a little bit of a break of 65, while because of how important I feel that 65 is, I think that's an important level to hold. Even if it were to break, as long as we hold 62, I think I'd have to be open to the pullback. I'm not really expecting that personally, but that doesn't mean it's not going to happen, right? So as we move into the financials, another day of good resiliency over here. It's not been pretty, really, as of late. Excuse me. We've continued to do the right thing, right? We broke resistance. We continue to push up. Just been very choppy and back and forthy, much like the overall market here in the financial sector. So still continuing to show me at least some overall strength. It's not running like maybe we would like it to, But as we've talked before, I mean, when the whole market's at resistance, it's a little tougher, right? It's a little tougher to run. And I think we're seeing that here in the financial sector. Some interesting charts over there, I think. Watch that 200. That kind of seems to be that last line of defense into that 2740, 2750 level of resistance. I still like this, much like the material sector. I still feel okay personally about the financial sector. Don't like it as much as I do like materials if we get a break, but we're not there yet. So industrials, just like everything else, continuing to have that battle here at resistance. Did work down, much like the rest of the market, but a lot of resiliency. We know, we've watched for several weeks now, any excuse to buy industrials appears to be a good reason to buy industrials as of late. We know how important, historically speaking, at least, that 77 is. I really, really, really like the way it's potentially developing. A little pullback or consolidation at a pretty easy, in my opinion, to identify level of resistance in a very, very strong sector, leading into a potential breakout maybe. I'll really like the break if we get one in the industrial sector. Call me crazy. I'm certainly not on an island there by any means. We're not there yet, though. Again, probably going to take something happening in the market to push us through. And I don't necessarily believe that from a short-term perspective, it has to be anything other than we took 5 and we're making another run at it. I don't think it has to be news related. Personally, that might help. That certainly probably, good news if the market interprets as such probably would help. But, the market can run, I think without any news, especially in the short term. But we're going to have to break these resistance to put that theory to the test. And who knows, maybe we'll get some news that can spark that movement. Over in tech, very similar. We are a little more room to work before we challenge resistance, but we are close enough, especially with everything else right underneath resistance, to, I think, say it's basically the same as everything else, fighting at resistance. So big battle right now. We're seeing it pretty much across the board. Tech, I'm keeping an eye just below 72 as kind of that area of resistance. Beyond that, I still feel like there's really some nice upside in the tech sector if we are able to get a little bit of a break. And again, just because we're not seeing any buying doesn't mean we're seeing any sell signals. I mean, once again, from a daily perspective, not really seeing them across the board. Even in the staples, who, in my opinion, has been showing the most relative weakness of the sectors as of late. I mean, it is really a very short-term, short-term sell signal that maybe we're seeing here closing below the 9 yet again. That 9 is turning over. That short-term moving average for the first time in a while is not going up and is starting to spin to the downside. And with all that said, we're still sitting on a doji at the 20-day moving average. And so how bearish can you really interpret that? I don't feel like you can interpret that all that bearish. I do think we can look at this low. I'm going to move this so I don't embarrass myself with trying to draw a straight line. I think we can look at this low as kind of that first level of support. If this one gives out, I think you probably do take off of the bullish blinders, if you want to call them that. I don't know that that's what they are, but you take off the bullish goggles at least a little bit if we take out that support level. Right now, I don't think we can say this is bearish so much as I think I'm comfortable saying treat it like it's neutral until it decides what it wants to do. I still will enjoy a breakout if it wants to give me that. I don't have high hopes necessarily, but I'm open to it, right? And that doesn't mean it won't happen by any stretch. So I think we can keep an eye on this 5350 area, as well as, of course, this, just shy of 55 old resistance and support zone as our primary areas to be keeping an eye on over there. Over in utilities, I mean, it's one of those. It's been so strong. It was at resistance. We've seen some profit taking, but as we saw with the real estate sector for so long, any excuse to buy something hot is easy to justify it, right? And so we're seeing that here in the utility sector here today, not even really developing into a pullback off of some pretty major resistance, right? We've talked and looked at that 57 mark on several occasions, catching our footing here today. Even yesterday, we had a pretty good sized red candle before coming well off of those lows. It's just one of those sectors right now. I still feel like it's either going to need a little bit more of a retracement, because I don't think you want to ignore 57. I think a break of 57 is a very nice signal. We saw that weekly chart yesterday. and we may very well, not get that pullback, and that's fine. The break would be a fine signal for me. From a pullback point of view, only speaking for myself, there's no way you can buy this pullback because you have to assume that we can't get through 57. Not that I don't think that it's possible, but I think that's the right assumption to make. So need a little bit of a deeper pullback in my mind if we're going to go into utilities that way. Maybe we are going to kind of do the real estate thing and just hang around at resistance before trying to push through. But as we've talked many times, 57 is definitely something to be keeping an eye on, really, no matter what your personal plan is. I think you have to respect that resistance based off of the history there. Now, over in healthcare, this is going to be a weird one, maybe for a minute or two, because for the most part, healthcare didn't do all that poor today, But when we look at the healthcare ETF, it's a little ugly, and it's getting a little bit closer to support. We saw those healthcare plans really get hit today, and it may very well just have been a thing. We haven't changed technically at all, in my mind, on the healthcare sector. And as long as we hold this swing low, I'll continue to feel that way. That breaks, we can have a little bit different conversation, especially with the way it's looking right now with those healthcare plans. But it's almost like we are going to have to, if we continue to see selling in those healthcare plans, but strength in the other areas of the sector, we might have to kind of break them apart, at least in our heads. I wouldn't want to be buying those healthcare plans today. Those were some pretty ugly things. CVS broke, some major support, in my opinion. All of them pretty ugly and pretty ugly closes on the day. Whereas other areas like Merck still holding this breakout, Johnson & Johnson still holding up. So we're going to have to keep an eye on this one in the next couple of days. And today easily could have just been a reaction. We've seen lots of one-day things, right? News-related things in quotation marks. So we'll see where this one takes us. But it is interesting that the healthcare plans were really what dragged this one down today. Individual, companies in the other areas, it was just kind of a normal slow day in the market for them. So keep an eye on this 91, though. We have seen that nice upward movement off of it. We are seeing some weakness in the healthcare plans, regardless of what my brain thinks. We saw some weakness here today, and that seems like the type of thing that could lead into more. And it also seems like the type of thing that, wow, what were we overreacting for? It's hard to, get a handle on news after one day, especially when it's an introduction of a bill, so I don't know where that one's going to take us, but it might make our ETF a little bit funny if it's going to continue to work to the downside. If we're seeing that much of a difference between the different industries, we may have to look at them a little more isolated in the days to come. Beyond that, I think we can just continue to look at this 91. As long as that 91 holds, I'm not really going to think too long and hard about that personally. If that gives out, though, I think I'm going to have to pay a little bit more attention on a more industry level, at least for the short term. Resistance continues to be the same place, that 93.50 marker, still lots of room, but it's probably hard to see healthcare working to 96 if those healthcare plans go into, bearish moves. It's just hard to drag all of those up. Any one of them, sure, but if they're all going to sell off, it's going to be tough to make it to 96, without them pulling at least a little bit of their weight, I think. Over in the discretionary sector, pushed down a little bit further off of that resistance. I don't really think that's a bad thing. I still really like this area if we are able to break. It's becoming one of my favorite ones potentially for trades next week if we are able to break. But again, much like so many other things, it may very well, from a broad perspective, take the market breaking out to get through that level of resistance. No real sell signals, struggling at that high point, so that does make some sense. Don't really think there's any reason to think sell here today. Just don't think there's any reason to run off and buy it today either. I do think it's probably wise to respect that level of resistance. A little deeper pullback, or even individual components, I'm open to, as I usually am. But broadly speaking, probably the signal is breaking 112 with where we are right now. Pay that extra $1 in my head, or $1.25 to get that break, get that signal. I think that's money well spent personally, and I'm willing to wait it out if that's what it needs. Real estate, weird day. We were really, and I was thinking, when I popped in and took a look at real estate, it was a big red candle. I was thinking, finally a pullback. And we really, again, it's not as pretty as it has been, right? For the first time, we've been closing below that 9. That 9's kind of turning around on us. Not super bearish signals, but certainly less bullish signals, right? But even today, jumping off of those lows very nicely, putting us a nice big doji in play here today. I'm not ready to say the pullback's done just yet based off of that doji, but if we start to see some movement back into this in the next couple of days, I think we may be able to say that. So if you've been looking for a pullback in the real estate sector, and it's generally not a swing trader's favorite because REITs don't tend to be particularly volatile, but that doesn't mean you can't like it. Doesn't mean I can't like REITs, right? If you have been looking for those pullback opportunities, well, I don't think it's there just yet, at least for my trading rules. I think it's probably time to start, scouting through some real estate stocks, see if there are things that you're interested in, if that's where your head's at, because we are finally getting a pullback. I don't think we're ready to say it's done yet. I don't think we can, I couldn't, for my rules, get into this if I wanted to, but 2 days from now, it might be a very, very different conversation. It has been very strong. We've not seen a pullback. So first pullback in a while, probably should at least pique my interest, right? So resistance, I think we can continue to look at the previous swing high as of right now. But I don't think it's quite, sold me at least that the pullback is through. And lastly, over communication services, just like the market, doing a whole heck of a lot of nothing here, still flat, still trading between support and resistance. And as I've said, for me, this one's becoming easier by the day. 2 days ago, the break of 47, the break of 45 were the signals. Every day that we're still in that range, I'm going to feel even better about saying that. So still in that range, hard to get going without Facebook and Google. We all know that. We all know how crazy the video game stocks have been lately. So I don't think it's really made a decision one way or the other. I do, however, feel that a break either way is a signal. Break to the upside, I think that's a nice bullish breakout signal. A break to the downside, we will have seen a failure at resistance after a break, of course, but a failure at resistance and a failure at support should be room either way. I think with the way it's developed over the last week and a half, should be some room either way when it does decide to come out of this trading range. But for me, at least collectively, you are still in that range. And I probably can't see a scenario where I'm changing, at least this week, that statement. So we've kind of gone a little bit flat within this area. And again, so many of these stocks were, not really joining in with the market. Hey, it makes sense to go sideways when the market's resistance. Everybody gets a pass, in my opinion, at that point. But what about when we were working to resistance? We saw industrials, we saw real estate, we saw utilities, we saw even staples, who I was shying away from, work to resistance. What about you, communication services sector? You weren't really getting on board. You had a good day on Facebook earnings and a nice couple of days, and that is what we've seen. I would have expected more. This is the first time we ever broke resistance, on those Facebook earnings. I mean, think about that. In the entirety of its history, that had never happened, right? It doesn't have a long story to history by any means, but that was our first break of resistance ever. And this is what we've been given. I'm not impressed. Now, a break of that resistance, I'll change my tune really quick. But until then, I think you are on the sideways timeout corner, communication services. So really not a lot here has changed. We're continuing to hold our break over in the energy, continuing to be very, very sideways here in communication services. Most areas are still hanging right below resistance. Interesting development in real estate, maybe giving us a pullback opportunity late week or early next week. I would love a few more days of small selling over in real estate to get us maybe some risk to reward that we could work with. But other than that, kind of just another day in the market. Best Buy, big day on earnings. You saw healthcare plans really, really struggle, but not a very interesting type of a day, as we are just going to have to fight this one through until we figured out what we want to do at resistance, whether that's break it or officially start selling off of it. We're all just kind of waiting and watching, and we're kind of in the middle of the season, if you will. Not a lot of exciting things going on, but there's always interesting things going on from an individual perspective, right? Sometimes you look at the S&P, you think nothing happened, but then you take a closer look, Best Buy's up 15%. Mylan's down 15%. Every healthcare plan down 3 or 4%. And these are some big companies. It's always a little more interesting on the individual level. So as we transition into our volatility index, not really a whole lot to see here. the market's doing a whole lot of nothing. And so the VIX is probably, it might be moving a little bit, but it's really not spiking or significantly dropping one way or the other as expected. We did see some buying come in off of that old 96 support zone over on the dollar here today. I don't think the signals are there, and I would not feel comfortable trading this chart, even if I weren't still overall neutral on it until we come out of this range. But a little more upward movement, maybe we could talk about it. If we see some upward movement, I guess we could argue that we put in higher lows. We've already put in higher highs. So if we just zoom it in to this and just say, hey, this is an upward trend, and I'd have to concede. If I look at it just from that perspective, I would agree with that. Now, while we are below those averages, I don't think that's a great looking chart, even without considering that we're still sideways. And I continue to look at this overall from neutral. But we are holding support, and I do think you have to respect that. Showing some upward movement tomorrow would be a little bit of confirmation for traders that are interested in that type of a situation. So tomorrow, I think, can be a very interesting day just from that perspective. We see some upward movement. Some people will call that a pullback, and some people would trade that type of a pullback. I don't think I'm one of them, but that doesn't, I'm just me. I don't represent anybody other than myself. And right. So we'll see where this one goes. Keep an eye on how these moving averages, and we'll watch it. If we see a huge move tomorrow, I guess it won't matter, but we'll watch it in the days to come, how these moving averages, especially this 9 and this 20, start interacting. If this can't hold for us, practically speaking, we probably are working back into that 200-day moving average, which will be our next level of support, as well as the 200. We did see an awful nice bounce off of the 200 last time we tested it. So if we aren't able to continue any upward movement tomorrow, my expectations would be we probably will be testing that 200-day moving average. But a nice little step back into the dollar after some pretty good selling after breaking that little floor here yesterday. Now, with all that said, really, again, if you think bigger picture, we are very sideways, right? And so that's where I find myself still over on the dollar. As we move into the metals, definitely some selling. We did see that gold floor breakout. And this is why I love floors and ceilings, because when it gave out, here's an hourly chart, we sold into it pretty heavily. The next hourly candle, a nice big doji, as people were clearly buying off of that. When it gave out, we saw some pretty steep selling in the short term. Now, with that said, that is just short-term stuff. And we did rally off of those lows. Nothing really has changed from an overall technical perspective. As of right now, I still don't feel like any pullback is ready to rock and roll on with gold. But I will also feel like anything that meets your trading requirements from a bullish point of view, as long as we're above this 13 and this 1300 and this 50-day moving average, I'm never going to make a strong case against gold as long as we're above those things. With where it is today, I don't think today is the day that you run off to buy a whole bunch of new contracts or shares of GLD or whatever. And a little bit of weakness, no doubt, taking out that little intraday floor. But again, I just look at that as a short-term thing for me. 1300 and that 50-period moving average, really anything above there, I feel comfortable looking at it as long as it's following the rules, of course. Can't say the same thing on silver though. Every day that passes, and I've been pretty transparent about silver. I think waiting for the break is the right play, and every day that passes, I feel more confident in saying that. Whereas gold, I'm a little more comfortable. We are failing at resistance. We saw some selling in the metals today, not a huge deal, but whether you're looking at this old floor or just this recent swing high, we are definitely seeing some selling off of resistance. Now, we still have not broke support, still haven't even tested the 50-day moving average. But for me, I really think the way to be looking at silver right now is much more range bound, waiting for a break, as opposed to, well, I don't think gold is there today, and I don't think I'm probably alone. Pullbacks on gold, I still think are very appealing. I don't think and every day that passes, I feel even more strongly that it's got to be a break or nothing. We do have some support down here at that 1550 range. So if we work into that, I could understand an argument from a buying perspective, but I don't feel like I would be there personally. That's not really my style. A lot of selling took out a little bit of a floor, and unlike gold that still has those short-term averages kind of sitting right on top of its rising 20, We've actually seen some turnover in the averages, looking a lot like it wants to go sideways. We'll see if that's how it develops or not, but really it's looking a lot like it wants to go sideways to me. So break, I still really like a break, but that's almost what it has to be for the time being for me over in silver. Natty gas, interesting stretch here. We did gap down after the reopen back to that old breakout point, and we saw some nice buying off of it. Let's go into an hourly chart here just to take a closer look at it here. So after our open here, really working back down towards that very quickly after failing at resistance. It's been natural gas, right? We gapped one day, tested resistance the next, back towards support the very next day. So it's still, it still can move. It's not done doing that. But at least for today, we have seen buyers come in off of that old breakout point. Now, where this is kind of developing, and again, I expect natural gas to not be as well behaved as I like my things to be. But if we continue to move up and take out this resistance, I think we'll be able to call this a confirmation of the breakout. Personally, we broke out, we ran to resistance, we've come back to support, and at least just for today, at least, that old resistance held as support. If we're able to continue to push forward and break that resistance, I think you'll have to call that another bullish signal. I don't know if I'll dare trade it, but I know I'll call it another bullish signal one way or the other. Beyond that, I mean, we're going to have lots. Whenever we're dealing with any reversals, and I was talking to Melarosa a little earlier today about reversals. The problem with reversals, if you want to call it that, the nice thing is there's lots of upside on a reversal type of a pattern. The bad thing is there's lots in the way. There's always a level of resistance, right? You break one and you're 2 feet away from another. And that's what makes them kind of difficult maybe to manage. We'll have to see where this one takes us. But I think if we do break this resistance after seeing upward movement off of this breakout point, I think you have to call it another bullish signal. We've already seen a close above the 9. We've seen the 9 stop, falling down and start going up. We're now above the 20-day moving average. We did fail at resistance, but again, that makes sense to me at least. And now we're at least holding at that breakout point. Maybe we can develop a little bit of a range and then break next week. That would be okay with me, natural gas, if you care about what I would like to see. Wouldn't mind seeing it kind of do this again, go into a little bit of a sideways range here, because that would be a really nice signal in my head. If we go sideways until next week at this time and then break to the upside, I would call that a really good signal. We'll see if we get it. It's natural gas, so you guys know as well as I do that it does what it wants to do. I can ask, but I should never expect, right? So, and lastly, over in crude, we did see that upward movement off of yesterday's candle. Clearly, there were buyers out there willing to call that a bullish pullback. I can't fault them for that, and I have no objection to that side of things. We did have a pretty solid day, closing out nearly 2%. Now, as we work into this resistance at around that 58 marker, definitely something we want to keep an eye on. I don't think we should blindly, if you are in this pullback or are still in crude and sat through it, even though it's kind of a one-day deal, I think we want to keep an eye on that 58. We saw that develop as, fairly significant short-term resistance. Do I feel like it's a brick wall? No, I don't think that. I don't think you have to blindly take profits at $58. But I do think with the history that we've seen there, keeping an eye on it's probably not a bad idea. If we can push through that, and if this pullback holds, that should not be that big of an issue. We're not too far away from testing this old breakout point, this old support zone here at that 59 or so, 59 and a quarter marker. Just going to be lots of little things. That in my head will be the next one. So from a new entry point of view, I don't think a break of 58, anything other than an intraday, which is a little bit different. From a swing perspective, I don't think I'd be comfortable buying a break of 58 because we're too close to 59. I just let 59 break. And so if you're on the pullback side of things, you're having a much different conversation, though. You're thinking about stop losses or scaling out or just locking in profits, whatever that might mean to you. So a little bit of a different conversation. Keep an eye on 58 wherever you find yourself. I believe a little more upward movement. I do think we'll be able to call this our new swing low, and we'll be able to say as long as we stay above this, we're bullish. One more day will probably get me comfortable saying that. I'm almost comfortable today. We did see nice price movement off of that, but I do feel one more day of upward movement would probably sell me that new swing low from yesterday is the low to be looking at. So that is where we find ourselves, ladies and gentlemen. after a fairly, again, uneventful day in the market. At least broadly speaking, we're just continuing to do the fight at resistance. Until we've decided a winner one way or the other, I imagine we'll have some conversations like this. Maybe tomorrow won't be the same conversation, but my expectations are it probably will. We're a little closer, we're a little further away, but my expectations are we're not really going to get, conclusive evidence one way or the other tomorrow. But we will eventually. We'll be ready for it when we do start to see sell signals develop as resistance wins, or see it break resistance, giving us another wave of potential bullish signals, or at least that would be my interpretation of that. So with that, ladies and gentlemen, as always, it is awesome to see you guys. And thank you so much for your time. It's always more fun to do this with friends than it is on your own. And I've said I've done it both now. Done it on my own a lot, and it's a lot more fun to do it with you guys. So thanks so much for joining me. Thanks for catching the replay a little bit later. I know this is a weird time, so we always appreciate you guys watching our videos. Be sure to subscribe to the channel if you are new around here and hit that notification bell. And of course, join us over at Tackle Trading on Twitter to keep up with some of the things that we're keeping an eye on each and every market day. Don't forget that we're having our Swing Trading 101 webinar free to everybody, pro members and non-pro members alike, over on Tackle Trading here tonight at 8:30 Eastern. So have fun with that. Be sure to join us over there. Coach Matt, he'll make it fun and informative. So make sure you jump over there and enjoy that. If you don't mind, it's always helpful and appreciated if you do give us a thumbs up, just to let us know that it is helpful, and to let YouTube know that it's helpful as well. Always helps us get the message out. So thank you guys so much. It's always my pleasure to see you guys. Thank you so much for joining me. You guys have a fantastic Wednesday. Enjoy the Swing Trading webinar here tonight. I will see you same time and channel here on tomorrow afternoon. So Thursday already. Goodness gracious, the weeks go by quickly. So thanks so much, everybody. You guys have a fantastic afternoon, and I will see you tomorrow. Bye, guys.